Hello and welcome. You're watching Morning Trade on Moneycontrol. I'm Nandita Khemka and I'll be talking about the setup for the markets this Monday morning, as well as talking about some trading strategies to power your trade this Monday morning. And we will also be taking up your queries for the day with our experts on the show. But before we do that, let's take a look at how the global handover is looking like this morning. Well, Wall Street ended with losses last week as hawkish commentary from US Federal Reserve members tempers optimism over promising inflation data for the month of October. Asia too opens week ahead of FOMC minutes later this week. SGX Nifty hinting at a negative open for our markets as well. European markets ended higher on Friday as investors digested some tough statements from some US Fed members. The stock 600 gained over 1%, pairing losses from the last two sessions. And as the Nifty consolidates around that 18,300 level, is it time to book profits now? Also in focus today will be metal counters as well as Tata Motors, Dr. Reddy's and IEX. Let's now get on board our guest for today, Gaurang Shah of Geojit Financial Services joins us now to discuss the market setup as well as the themes to watch out for this week itself. Good morning, Gaurang. Good to have you on the show. Well, my first question to you is markets are consolidating around that 18,300 level. There's a lot of hawkish commentary coming in from the US Fed members, some of them saying that rates could inch up as higher as 7%, even though inflation for the month of October has cooled off, but it doesn't really warrant a pivot just yet. But looking at the FII flows, we've seen somewhere around 30,000 crore rupees being pumped into the Indian markets in November. And we will be watching out for the FOMC minutes also that will be coming out later this week. And we have back home, we have the monthly expiry as well. So in light of all these cues, what is the setup looking like for the markets?
Well, thank you and morning to all of you, Nandita. So, beginning last week, we had given out a market outlook, at least from a short to medium term. We expect the market to consolidate, primarily because of, triggers. And history's witnessed, Nandita, that whenever we have come closer to the all-time highs and tried to cross over, the market consolidates. And that's what exactly is reflecting. And if you actually go to see, right from the day of Muhurat trading last month, we have seen significant moves on the index, both Sensex and Nifty. And the fact that we were approaching the all-time highs of 18,600 on the Nifty, 62,200 on the Sensex, it was only prudent to expect this consolidation. Now, this consolidation may get a little bit of longish in terms of period, but in terms of points, I don't see any large meaningful crack given the backdrop of events that are lined up. In fact, there is nothing really significant where the markets, we could see the markets, grilling down towards much lower levels. At best, I think 18,000, 17,700, 600 could be the zone on the lower side. On the higher side, you've seen, steam running out in terms of uptake whenever we go closer to that all-time highs of 18,600. So I think this is a brief period of consolidation, and we should give it to the market. Consolidations are always healthy for the market and investors because whenever we consolidate, we make a strong base, and then it is very easy to maintain the momentum on the higher side and stay over there. On a weak base, you tend to crumple down very easily, so it's good. On the Fed interest rates part, Nandita, well, I think the best of the minds over there will have to do whatever is necessary for the economy and to bring growth back and consumption back and rein in inflation. In terms of FI flows, well, I think, there are hardly or few economies we can come closer to India. We have had a downtake in terms of inflation numbers for the last 3 months and the latest number that we had. And there is a comfort zone in terms of lower levels for inflation. Crude oil is edging lower, rupee is gaining its momentum against the dollar. And I think interest rates over here, I think December we have a credit policy lined up. So we expect a little bit of upward move over there and then possibly a status quo. So in and all, I think a brief period of consolidation is given to the market. It gives opportunity to all those investors who are waiting out and coming to the market. And I think immediately short to medium term, try to book profits in case if you have short term, medium term trades in the market and maximize your profit increase your cash levels, don't leverage, and stay a little bit patient as far as taking new positions are concerned. But for long-term investors, I think these kind of corrections are great opportunity to nibble into the market.
Right, that was going to be my next question to you on what investors should be doing at the current juncture. But as Gaurang pointed out, it's time to book profits, and for long-term investors, maybe look at buying on dips. Moving on to some sector-specific and stock-specific news. Well, government has removed export duties when it comes to steel exports as well as iron ore exports. How do you witness this? How do you view this move for the metals pack as a whole? Do you expect a rally to come in today in light of this bit of positive news?
Well, a breather could be there, Nandita, no doubt about that, because I think it was a long-standing demand from the metal sector and the representatives of this sector to the government. And not to forget, the metal sector was down, out, and beaten, and there were pressure in terms of numbers also because of the input cost going up, margins coming under pressure, demand slowing down, news flow from China. So this particular sector was, hit by a double whammy, if you can. And double whammy in the sense the government increasing the export duty. And now, of course, the news flow that on certain items, the government has decided to roll it back. So I think you will see a relief rally come through. But for a meaningful, sustainable rally, I think you need numbers to support that. And the numbers, our sense at Geojit is that maybe will start doing a catch up from fourth quarter this financial year. So you have one more quarter of pain, if you will, in terms of numbers for the metal sector. But this duty rollback on certain items can certainly throw in some life in the metal sector.
Right, Gaurang, last time we spoke, you were quite bullish on the banking pack as a whole, and after that, SBI has also reported stellar set of numbers. How long do you expect this dream run to continue for banking stocks going forward?
Well, I hope it stays for long, honestly, Nandita, because we are still positive at Geojit as far as banking is concerned. And honestly, Nandita, if we are talking about India becoming a 4 trillion, 6 trillion economy over the next couple of years, or maybe more, then I think it's very prudent for banking sector to support it. Because without finance, you cannot dream of going closer to those kind of numbers. And we have also heard about, private sector capex picking up, government spending moving on the upside. So the performance on terms of quarterly numbers and yearly YOY, I think there is still a lot of steam left for the banking sector. You need to be a little bit selective as far as public sector banks are concerned. But private sector banks universe, I think you have a lot of choice. And our sense at Geojit is that this will continue to perform. Along with this, Nandita, there are two more sectors. Of course, one which has already been in the limelight, that is defense. You will see a prolonged performance coming over there, healthy order book execution. But specialty and agrochemicals, I think China plus one policy will throw in tremendous amount of positivity, and that's what reflected in the second quarter numbers. And going forward, we expect the numbers to improve for the specialty and chemical sector. And if I have to pick one stock over there, then it would be Tata Chemicals.
Tata Chemicals looking attractive according to Gaurang. But Gaurang, I also want to get in your thoughts on the cement pack, because the quarterly performance hasn't really been up to the mark. But on the other hand, private capex is picking up. So how would you view some of these cement counters going forward? ACC, Ambuja, Ultratech and the likes.
So this sector also was a victim of input cost going up and margins coming under pressure. But that has started to ease off. At least that was visible in some of the names as far as the cement sector is concerned. And if the reality on the ground level, Nandita, is that the real estate sector is doing well. The government is going to spend on expressways, highways, ports, airports, affordable housing, rural road construction activity, rural housing, and along with that, private capex. So if you throw in the kind of positivities that we look at, I think the demand is likely to come back at least from a longer period of time. The numbers for cement company, stock specific, company specific, may be a little bit different. But we expect that for the third and fourth quarter next financial year, the input cost should come down. Operational efficiencies have been put in place. At least that was visible in the second quarter. And going forward, I think that will help the margins to improve. So ACC, Ultratech, Ambuja and Grasim, these are the top four names as far as large cap names are concerned. Dalmia Bharat, Ramco Cement, JK Lakshmi Cement, Shree Cement, Birla Corp, and India Cement. These are some of the mid-cap names that we remain positive.
These are some of the mid-cap cement counters to watch out for going forward. Gaurang, I want to ask you about the pharma pack as well. US FDA concerns have returned to haunt some of these names like Lupin, etc. How are you viewing the entire pharma basket at the current juncture?
So we were positive when the entire not only on the pharma sector but also for healthcare like hospitals and diagnosis. But that was the case when this pandemic hit the entire world and there were a lot of issues. And we saw the pharma sector outperform its peers or maybe other sectors for almost about a year and a half. And then there is some kind of slowdown in terms of performance numbers, red flags from US FDA, FDA establishment inspection report, Form 483, whatnot. And the problem, Nandita, is that a red flag on one pharmaceutical company and the domino effect or the chain effect starts reflecting on others also. So this is one particular sector that you don't expect a huge performance and outperformance. At best, it may be a market performer, but or neutral kind of a rating. But in that neutral kind of a rating, I think there are four names that may stand out, Nandita, in terms of performance, purely because of the generics and APIs. And those names are Sun Pharma, Cipla, Dr. Reddy's, and Divi's Laboratories. So you need to be extreme. Not that you don't have coverage on other few names, we still have. But if you ask me in terms of preference, then these four names would be the top priority.
Right, Gaurang, I also want to get your thoughts on Tata Motors. There's been a Sensex reshuffle, and Tata Motors will be included on the Sensex from the 19th of December. What is the setup looking like for this stock going forward?
So honestly, let me be a devil's advocate. Life or a drag below 380, 360 on the lower side looks a little bit limited. And number of times, Nandita, if you go to see, the stock of Tata Motors have gone towards 400 mark and then it has bounced back. So these are, some levels that you need to watch out. So in effect, what I'm trying to tell is that I think it closed at somewhere close to about 420 or 425 last week, Friday. So whenever you see Tata Motors going closer to 400, start accumulating from a long-term point of view. Add to it if you get an opportunity below 400 and stay put. Yes, there were news flows of a top executive resigning as far as JLR is concerned. In terms of numbers, the losses have narrowed down. That's a good thing. EV segment launches are lined up. Tata Sierra, which was launched many years back, is coming back in a new avatar. And you have a lot of traction in terms of the commercial vehicle portfolio that Tata Motor has. So in all, I think it's a stock which may test your patience, but you have a little bit of risk appetite and an elevated time horizon, then I think the patience will get rewarded. We have targets 500 plus as far as Tata Motors is concerned. And this applies to Tata Motors DVR as well, because the underlying security for the DVR is Tata Motors shares. So we remain positive, but yes, it is a stock that will test your patience.
Well, a stock that will test your patience going forward, that's Tata Motors for you. But when it comes to something like Zomato, there also we have seen some top-level exits of the last few months. And we've seen the whole bonus issue fiasco with Nykaa. So I really want to get in a question on this whole new age basket, given the fact that Nykaa shaved off somewhere around 20-25% over a matter of 4 to 5 sessions. But then it did manage to bounce back a bit on Friday. What are your thoughts on some of these companies like Nykaa and Zomato going forward?
So, Nandita, I'll first of all limit my comments to Zomato because that is where we have a coverage. And that's the only stock amongst the new age unicorns or new age technology stocks, you may call it. So, Zomato, we remain positive and we expect the stock to bounce back after a brief period of consolidation because of the events and the news flows. As far as other stocks are concerned, I think first of all, valuation of the IPO was a little bit of a question mark for us. And the problematic area, Nandita, is that there are no set rules to understand or gauge the fundamentals of the new age technology stock. What I'm trying to say is it differs from person to person as to how he or she looks at and evaluates the company. Uh, well, a lot of people called it a master stroke as far as the bonus issue was concerned to set off the overhang of the lock-in period expiry and make a little bit of attractiveness. It worked for a while and then it fizzled off. Since there is no coverage, I would not recommend on buy, sell, or hold on Nikia. But this is just an observation that I'm mentioning. This is not a recommendation, and one needs to be a little bit careful and cautious as far as valuations are concerned.
Right, Gaurang, we spoke about how the markets have been consolidating at current levels, but given the fact that there is a tailwind when it comes to oil prices, rupees also strengthening once again, do you expect a year-end rally to kick in somewhere in mid-December or something like that?
Well, I definitely also, and I hope we kiss the year 2022 goodbye on a happy note or on a positive note as far as markets are concerned. But there is also an overhang, which was there over years back. The people used to say, a lot of people on the street used to say that because of this year end, FIs would sell, they want to bring back profits on their books, distribute dividend, etc., etc. But I am of another thought altogether. I think FIs have been selling left, right, and center right from October 2021, Nandita. And right up till date, before they started buying again into the Indian equity markets, they have closed in excess of 3,50,000 crores. That's the last number known to me. So I'm not worried about FISL, but yeah, I'm optimistic as far as year-end rally is concerned. And I hope this year-end rally carries on over to 2023. And I think over there, we expect the first quarter or the first 3 months of calendar, Jan, Feb, March, we may possibly end up making an all-time high, and we may be able to sustain those new levels given the strong consolidation that we are witnessing right now.
Well, Gaurang is hopeful and optimistic about a year-end rally for the markets. Well, with that, thanks a lot for joining us this morning, Gaurang, and sharing your thoughts with us.
Thank you so much.
Thank you. Well, moving on to our next guest. Joining us is Rajesh Palvia of Axis Securities. Good morning, Rajesh. Good to have you on the show. Let me talk about the setup for today. Doesn't look very positive given the fact that the SGX is negative, Dow futures are trading in the negative, and Asian markets as a basket is also trending lower this morning. What is the setup looking like, and what are the levels that we should be watching out for in today's session?
Good morning, Nandita. So, overall, if we look at this series, we are entering into the expiry week, and looking at the setup, we have again witnessed some supply pressure at a higher level. Almost we reached to the all-time high trajectory for the Nifty. But looking at the setup now, we feel that 18,100 is likely to act as a good support area if any dips comes in the market in today's session also. So 18,100, 18,150 is very important support area for this series now. Because a lot of put writers are aggressive at 18,100, 18,000 as well as 18,200 strikes. So if we don't slip below 18,150 level, then some support buying action should come around those level. Looking at the expiry point of view, we feel that if we hold that level, then possibly again pullback action should come in the market towards 18,300, 350, which is the immediate hurdle for the Nifty. If we able to cross 18,350, then possibly this rally can extend, or this pullback can extend up to 18,450 or 18,500. But till the time we are expecting some consolidation in Nifty, 18,100 to 18,350 is the range. For Bank Nifty, till we are holding above 42,000 level, which is very important level as of now. If we hold 42,000 level for Bank Nifty, then possibly some support buying action we can see in the Bank Nifty also. So as of now, both the indices are showing strength. There is no as such weakness on the short to medium term structure. So buy on dips still our strategy. 42,000 is our stop loss for Bank Nifty. If it's hold, then again one can buy around those level. Upside the resistance is at around 42,650. Once we crosses those levels, then short covering action can be there in the Bank Nifty also.
Right, buy on dip strategy, and those are the levels to watch out for on the Nifty as well as Bank Nifty. Let's dive in straight to our queries segment then. Let's take in a query on the OMC basket. We've seen crude come off quite a bit over the last few weeks. So Vignesh N has written in, and he has a query on the OMC basket. He wants to know whether this is the right time to accumulate the likes of BPCL, HPCL, IOC going forward. What would you suggest he does?
So overall setup for OMC companies are still weak. Nothing much in terms of bullish to remain bullish at this moment. Though crude has come down, but still overall setup for OMCs are still weak. If you want to trade for a very small gain like 1 to 2% kind of trading setup, if you want, yes, some buying action can be there in the petro. That setup is looking little positive on the near term setup, but still one should keep very strict stop loss of 205 if at all you are buying for Hind Petro at the current level. Yes, on the higher side, 215, 216 are the resistance area. So nothing much on the OMC because overall structure is still weak for on the technical ground.
Well, overall structure for OMC is looking pretty weak despite the cool-off in crude prices. Next query is coming in from Venkatesh, and he has a query on Power Grid. Now, the stock has been in a bit of an uptrend over the last 1 month or so. How does the chart setup look like for the next 2-3 months going forward?
So some recovery is there in the power grid. Looking at the overall setup, stock is taking support at around its multiple support zone of 205, 208 level. And again, we have witnessed some buying action in last week. Looking at the recovery in the stock, we feel that now stock manages to cross about 221, then possibly this pullback can extend towards 228 to 230 zone, which is again major resistance area. So if you are already holding it, keep your stop losses at around 215 on the crossover of 221. Then possibly this rally can extend toward 228, 230, where you can again book profits.
Right, quickly get in one last query on the show. This one is coming in from Vani Vedantam, and she has a query on Bajaj Finance. Now, this counter has been in a steady downtrend over the last month or so. How does it look like going forward?
So we have seen significant profit booking in Bajaj Finance, especially, and now stock slipped below its 100-day moving average also, which is, and as well as now it's approaching to its 200-day moving average, which is at around 6740 level. So Bajaj Finance is looking weak on the near-term setup. If it continues to trade below 6850 level, then possibly it may go further down towards 6650, which is the next support area for Bajaj Finance. So trend is weak. So wait, if you want to buy the stock, wait for further more corrective action. Try to buy around 6650, 6600, which is the next support area. If you talk about Vedanta, yes, stock is showing some buying action, but still since last couple of weeks, stock is facing some hurdle at around 320 zone, which is the major supply zone for the stock on the near-term setup. Once stock manages to cross above 320, then possibly it can show some upward rally towards 335, 340 zone. So overall, looking at the recovery in last couple of weeks, we believe that if stock continues to hold above 305, then some possible support buying action we can see towards 305. So hold your long position, keep stop loss of 305.
Right, Rajesh, we're completely out of time, but any stock recommendation for our viewers for today?
So we believe that some buying action we can witness in banking space. So from that space we like Canara Bank, and looking at the setup we feel that Canara Bank can show good up move towards 318 to 322. Keep stop loss of 305. Another stock which we like is Bharti Airtel. Bharti Airtel is showing a strength on the weekly chart. Looking at the setup, we expect a target of 855 to 860. Keep stop loss of 825 to remain long in the Bharti Airtel.
Right. Well, with that, we have completely run out of time today. Thanks a lot for joining in, Rajesh. And for viewers, don't go anywhere because coming up next is Markets with Santu and CJ.